Hello, ladies and gentlemen, and welcome back. Trillions of dollars are set to expire in these markets in less than 24 hours. If you're a new time viewer, you might want to stick around because what you find during these third week options expirations is pure manipulation. We'll be talking about stocks, commodities, and cryptos today and breaking down the smaller timeframes to really understand better what's going on into this next big move and most likely what might be the traps over the next couple of weeks. Will the bears take control and push us back down to a gap fill? Yep, that's looking like a possibility at this stage. Stay tuned. All right, everybody. Well, welcome back, of course, to the Daily Show. We'll start off with the macro data, then we'll lead into the lead indicators and, of course, the key levels we need to be watching right now throughout all of the markets. So do stocks potentially like gridlocks? Yes, is the answer. Stocks love gridlocks, and this is a good case scenario for the bulls moving forward. You know, dips that might happen over the next 6 months or even 3 months or even a couple of weeks may want to be met by buyer demand because gridlocks tend to mean that the risks of changing governments, the risks of new policies are not there. Markets like that. And you can see the S&P 500 annual return when there is no really strong House seat majority is usually a pretty damn good green tick. Let's move through some other things here. We also see that when we are having fall-offs in markets, there is a case to be made that potentially things get much, much worse. The Nifty 50 was an example back in the 70s during that inflation time as well. Then we had the dot-com bubble, and now we have inflation shock with the new economy. So will we see a huge compression of prices? There's a lot of arguments going on about whether prices should be compressed by certain metrics, and we'll take a look at one of those on the weekend video, a special edition this weekend coming up. So make sure to subscribe for that, as I think you might find it quite interesting. We'll also be doing a deep dive into whether gold is going to continue to rally at that point as well, because gold is super interesting in both stagflation and even potentially dropping rates and dropping yield environments. We also do have a big day coming up. Of course, we know that Black Friday is coming, and what that means is usually, well, we've got Thanksgiving as well. So Thanksgiving is the big one, and that usually brings some pretty big bulls to it. The bulls come out and they start to buy up. If we sell off Friday and we sell off, let's say, on Monday or Tuesday, there's a good turn point or a turn case for Thanksgiving. And we'll be looking at the stats next week to break down that as we get closer to the event, probably in the Monday or the Tuesday video. Let's also talk about smart money versus dumb money. As we know, this metric has shifted for the first time. However, the difference is both smart money and dumb money are both buying after the CPI result. That is the inflation result. And what this does is it helps us kind of figure out the points that may be correlating with tops of markets. If we'd followed this in 2022 all the time, it's been incredibly good on the cross of saying maybe we need to be cautious in these markets. And considering that FOMO effect from the CPI number, maybe a cooling off after that event is needed for these markets. Let's talk about breadth. Is breadth looking good? Yes, it is actually. Breadth is a great indicator of rallies. So a lot of people have been saying, Tom, you're too bearish at the moment. Well, don't worry. I'd like to bring in both case scenarios. I just think that the market should pull back at least to gap fill because that's, traditionally what does happen. The calm after the storm, which was in this case the CPI number. And now some things are trickling in that are a little bit negative about the economies again. So breadth is a good indicator. This actually shows you potential really nice rally points in markets traditionally. But the problem is it hasn't worked as well in 2022. So the big thing is we just haven't seen it as strong in 2022. We haven't seen as many people using it effectively. And I think the market's taking advantage of both thrust and breadth in this year. Now, if you haven't already followed us over on Twitter, definitely consider doing so. I'm now releasing a quick report each week, one of the ones that's behind, of course, in our private trading community. More on that very, very soon. And if you're interested in these reports, definitely follow along on Twitter. And if you can, try to get us to 10,000 over the next couple of days because we really want to be posting a lot more here. And I do post some pretty nice memes as well if you're interested in those things. Q3 earnings, it's not good. Let's face it. Q3 earnings sucks. It's a bad time. 56% beat rate, not too good. Beats 2,113, misses 1,647. If this was any other year, I would say this is an atrocity. But it isn't. It's this year. And of course, bad is good and good is bad in the year of inflation and the year of the Fed really taking away the stimulus packages for the market. So this will matter, though, I think over the next 3 months, 6 months, 12 months, earnings are going to become the problematic child, because guess what? When earnings do shrink, eventually that matters. Eventually that's going to hurt companies. And unless we can have the perfect soft landing, I believe this is the story of 2023. How bad do these earnings get, and how much compression do we end up getting in price action around the earnings period? Make sure to stay on top of that story. So just before we jump into the charts and we take a look at the key levels we should be watching right now, I wanted to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, what do we need to do right now if we're investors or even traders? Potentially, we're looking for deep value. How do we do that? Well, we need to understand our companies better. Maybe you like Tesla. Do you know everything about Tesla's balance sheet or whatever other stock you're looking at? Most brokers don't offer you enough in-depth information. If you want to know a summary of the company, the filings of the company, the shareholders of the company, Elon here being number one, then we can do it. What about the div? What about the short interest? And of course, the all-important balance sheets. We need to know, of course, what's happening with the financials. What can we do? Well, we can load up this platform. We can have access to the Tiger Brokers stuff, and we can come through and quickly get it with the click of a button. And also, more importantly, all there in one form. You don't want to have to go to a lot of websites and find all of this information. It's nice to have it there. I also love the valuation when you can check it out over time in terms of PE valuations, have a look at it, come down, check it all out. Price to book, price to sales, some of people's favorite ones. You can look here at the 5-year kind of history of it as well. So we can see the price to the sales. All of these things are very, very, very good to have as an investor, as a trader. Now, just a quick thing here, for a limited time, of course, you can get access to the Tiger Brokers platform. You can also get a bunch of special offers. Here we've got the offers for, of course, the Australian and New Zealand audience. And for anyone out there that's able and eligible to open an account, if you fund the account with as little as 1 cent or more up until the 20th of November, then you'll be access eligible for a 1-month FX Evolution private community access. So make sure that you check out Tiger Brokers. They've just won a big award for a reason. And the main thing is that they're giving great service to you, the traders and investors out there. All right, let's now jump into the charts. Let's get into everything that everybody's here for. Let's talk about these things. VIX has dropped. So we actually had a market going down, but the volatility is dropping. People often can't make sense of this. The easiest way to think about it is we're stuck in a range. So what that means is we're not at an extreme level either way. When we're not at an extreme level either way, we don't tend to see as much rise in the VIX. And remember, volatility at 24 is still high when you start stacking it out. If you go to a weekly, you'll notice a lot of the time the volatility index stays underneath 20. 20 is considered above this a bear market, below this a bull market, a nice healthy market to own and be more of a long-term hodler or holding investor. Let's move over to PCC. Have we seen the put call ratios drop or move around? Back to the middle zone here. Some wild swings in the amount of options coming out this week. We will talk about this. Generally, when we get these low reads on puts in comparison to calls, it has marked the potential of turnaround periods for the markets this year. And I think that's something that we're certainly looking at right now. Do we see a lot more calls coming into the market and more puts expiring? After this Friday is done, there's still a lot in December, but that gives us multiple weeks, literally a month between them, to potentially have some very large kangaroo style moves. And that's what we'll be looking for in these markets. Why were the markets down? Well, yield obviously rose. That wasn't good for markets. Markets don't like the yield going up. And we've seen that play out here. We've also seen it play on the 5-year, and the 10-year was also up. Do remember the terminal rates as well are starting to rise again. This is the highest rate that's expected that the Fed will go in 2023. 4.9%. Make sure you learn how to read that. It is imperative you do really in life. It really helps you out. When do you fix your term deposits? When do you do this and that? All of these things are related around yield. So make sure you follow the channel because we always cover that stuff and they don't teach you this anywhere else. They don't talk about how do you read forward yields. It's a massive game changer. So the DXY, did it get past our alert? No, I haven't changed anything here. I haven't even updated the boxes since the last 24 hours because I want to just really point out what's happened. The market did rally. The market has rallied to the key critical zone and it's found sellers. Now, this is for the US dollar. Of course, if the US dollar is able to bounce above this area, we expect pullbacks to be met by buyer demand. And what you're looking for now as a US dollar trader is probably, where is the key level that we should be watching? Where do we want to potentially look for the buyers or hope the buyers come back in? Well, you would think around this area here, around the 106 is mostly defended. You'd like to see the market find buyers here. And if it does, then hopefully rally through this zone. For the stock market to continue down, in some ways they need to be synergized. The dollar index needs to break this level. Once that happens, it helps build the storyline of success towards the stock market, the US stock market actually dropping. That hasn't happened yet. What about the euro? Let's go down to the 2 hour here in euro. And we have got that supply that's sitting here. We've sold off that level. And we've found, I guess you would say, the first signs of weakness. Now, the first signs of weakness actually happened over here where we made this lower low and we rallied up and we kind of speculated there might be some weakness there. There has been. But you'll notice we have an alert set underneath this 10264 level. And unless the euro is able to make it underneath that zone, it's going to be very, very difficult for this to turn around. At this stage, it's still theoretically in a longer term uptrend. That is more of a daily 4 hour uptrend, and it's only in like a 15-minute downward trend. So for sellers, you're looking for these levels up here to be sold, possibly a swipe of one of these and then take of that level. That would be certainly a very bearish sign. If you see something like this coming into London Open, that's usually a very good signal towards the short side. And it's more of bullishness until proven otherwise, I guess, on the higher timeframes. Let's move over to gold. Gold did show some signs of weakness. It hit that critical, most traded levels for the last couple of years. And we know already that this level has brought the sellers in before. So 2 weeks off the top, this is using the daily time frame. If we now scroll down into the 2 hours, you'll notice that there is a little bit of a turnaround story, but it's still found the buyers right where it should. And I'm looking for that to get taken. So in terms of setting alerts, I really want it underneath here and then a pullback to the short. We'll see whether that happens. But I did notice on GDX, which is of course the stock ETF, we saw an island reversal. So this is not boding incredibly well for the stocks for the time being. We will be doing a gold special. So don't get me wrong. I'm not super bearish on gold or anything like that, but I think we're due a little bit of a pullback ideally. And then maybe something like this, where we get a pickup somewhere in this zone. It was a great move. Congrats to people that have been in this type of thing. I still think it continues, but at the same time, maybe a little bit of weakness here over the next 24 hours. Let's move over to oil. Well, oil doesn't look so good, does it? Double topping here, breaking the low, closing below the low or right on it. It's going to probably find buyers now, but you've got to be careful here. The sells are in. So what that means is when we think about it, this low got taken. Rallies should be met by sell demand. Where is the last kind of area that we've seen some sellers and buyers come in? They've been fighting over this zone for a little while. So somewhere around that 84.65, that 84.60, if we think that oil is going to weaken, that's the area. If it starts breaking out above that, we've got to question everything about the sell. But at this stage, yes, it's mostly bearish on oil and not too many strong kind of cases to be made here. We haven't seen it really pass through though to the energy sector. Let's have a look at the energy sector together now. What's it doing? Well, it's going up. So stocks, actually energy stocks have been pretty good while oil has been declining now for a while. So again, does something need to give on stocks? Are stocks getting too expensive? Are they starting to do distribution? These are questions that I think we need to ask. And I believe we'll be following the energy sector quite a lot in the next couple of weeks and having a look at it. Let's move over to this indicator because I see a few of your comments and you say it's the stupidest indicator you've ever seen. In fact, that was the comments. I hear you guys. Okay, now hear me out here. Why am I even using this? It's just to show you the FOMO. Okay, I understand these are squeezes. What I'm doing is I'm comparing previous squeeze periods of AMC with, of course, the market toppings. Now, why is that happening? Because people are getting confident and it's allowing people back into it. Is there a coincidence between these two? I don't believe so. It's the symptom of people getting confident again, FOMO coming in, and effectively that euphoria that we all feel. Think back to Bitcoin. What was the end of Bitcoin? Let's see if anyone can pause the video and write it down the bottom. You might say Luna. You might say something else. Realistically, it was NFTs. NFTs got euphoric. Everyone was buying every one of them. And I'm sure many of them are unsellable, nor does anyone want any of those or a lot of them anymore. Now, the reason was because everybody was getting out of control. It showed us that the market was getting euphoric. That's kind of what this is. Yes, it's a squeeze, but it also shows euphoria. So I'm not going to use it that much, but I wanted to bring up that thing. It's the mental psyche behind these particular ones. It's just a good way of representing it. There are other ways to represent it as well, of course, in other stocks, but this was just an example. I wanted to answer that because I think a lot of people were hammering me for it. Let's move over here to the island reversals. What have we got going on here? Semiconductors, there's another one, and it's showing a little bit of weakness. Now, we know that if semiconductors do start to fail or fall off, that's been probably one of the best sectors in the recent weeks in terms of strength. First signs of weakness here. We've also seen it play through at Nvidia after earnings, had a rally through last session, fell off, something we discussed in the private community. And again, it might not be forever, but certainly a big run here. I think it's about 56% plus up over the bottom. Maybe it's time for a little bit of a pullback into a rally later on. Of course, this is very possible as well. Just remember, at this stage, it doesn't look like these charts, as in semiconductors and Nvidia, are that strong. What about Tesla? How's Tesla going? Again, another weak one. Could it become a double bottom? It certainly could. And I think this double bottom is worthwhile paying attention to should we break. So what we'll do is we'll set a little alert just together. We'll just put that above 200, 201, I guess. And we've also got an alert for a new low. Now, the reason I've got that is because a lot of people are thinking Tesla is the greatest buy ever. I'm not so convinced. I don't know why this price action's, well, I do know why this price action's pretty bad, but in general, it's not strong. And we're constantly seeing rallies being met by sell demand. That's multiple days now of Tesla being sold off. I think if Tesla gets underneath this 180, which we spoke about a lot together, we could be looking at a serious dive for Tesla stock. So while that might be a huge opportunity to a lot of people out there, we've just got to be aware of it. I'd like to see Tesla find buyers over the next 24 to 48 hours. If it drops more, find some buyers. We're right at that level where technically the buyers should come back in. It's pulled back quite deeply. It's time now to see whether there's someone there. I think if buyers are going to come in, they'll come in around this level. XLY, XLP, again, consumer discretionary, not showing its hand versus staples. That means that people are still moving defensive. We should also see that in that other indicator we've been using, which is the Dow versus the US 500. I'm coining this new economy versus old economy being the Dow, new economy being the US 500. Another day up for that. The best thing for the bulls here has to be the bonds market, though. If you're looking at bonds in general, whether you're looking at corporate bonds, whether you're looking at high yield bonds, let's have a look at high yield bonds and we'll bring them up. You can see here that there's a bit of recovery through these markets. Now, remember, yields have been doing nothing. So to see corporate bonds coming up, especially LQD, and yields just basically sitting mostly the last couple of days, this is actually a very, very good sign for markets. It is what you want to see, risk coming back into the markets. So yeah, I mean, could it be the low? I really don't like to fight the bond market, and traditionally this is actually picking up. So we'll have to continue to pay attention to this because we're not seeing all of the stars align, but this one here is certainly quite positive. So again, for the bulls out there, I'm not hating. I definitely think that those LQD bonds are starting to look a lot better in terms of the way the market's picking them up. What about the Russell 2000? Well, it hit that supply level. It's sold off. This was the precursor for us talking about weakness in the last 24 hours in the market. That did happen. If it rallies, where do we expect sells? Well, we expect sells probably to come in somewhere around 1847 potentially on this market, or even drive higher, taking the stops here and then moving through. That area there, though, would be where the sellers come in. What about the NASDAQ? Big rejection week, actually, and this happened with both markets. Fairly strong buyers coming off a key critical zone we'll talk about soon, and it really doesn't look super short. It kind of looks like it wants to take the highs here, possibly come back a little bit deeper into maybe even this level again, then sell off. That's the type of thing that I'd be looking at here. That's not the type of turnaround that you would expect. Have a look at the interaction here on the 5-minute with price. So it comes up and it initially reacts the way you'd think. Weakness through this structure. Perfect. Nice. Good work. Then it goes down. Cool. It looks pretty good. Then it comes up and now it's pressuring this level again. It needs to turn relatively quickly towards the sell side. You can see here where the market is, what it's doing. It's structuring here. Usually you want to see weakness come straight back in. It hasn't done it yet, but still more to the sell side than the buy side. Let's look at the US 500. Again, we've stacked the odds kind of down in this unfilled gap area down here around 3750. That's a pretty key level. We've also seen the market come back up to the 61.8 of the drop. All of these things are key zones, and we've seen a fairly decent turnaround. Now, if we actually scroll down, and we talked about this in the last video, there was a little area down here, this 3900, where we saw previously pickups during this huge rally. It just went phew, and then bought up. Somebody is buying in here, and you'll notice they did it again. 3900 was bought pretty aggressively in the last market day, so that 3905. This was that resistance over here as well. This is more of a standard resistance becomes support. There's a bit of demand there. A lot of things synergizing. Look at this though. It's snaking. Again, reaction off this? Yes, good. Comes up, question mark. That's not so good. So what I'm looking for is potentially markets to come back to 3980, maybe reject that. If they rally up harder, it could go all the way to 4,000 again and then drop. Again, these are all drop situations through these three zones. You have to have, of course, the way that you would activate these. And at this stage, that's the way the market's looking. SPX, yep, it's not quite filled the gap here as well. So maybe it'll want to do that. We do now have, though, the options. So let's have a look at the 18th. So this is the big options expiration. Maximum pain is at 385. So yeah, interesting close. We would expect that would mean the market goes down. Now 390 still has a bunch of puts on it. So 390 has become a bit of a battleground. We've talked about the idea that the market should really be between these two most of the week. So that's the 400 and the 380. We do have a decent amount of calls sitting here, and calls have certainly been coming up this week, but more importantly, 5.072 million units outstanding. Wow, that's trillion. That's a lot of money. Options expiration day. Yeah, all these poor bears, they got crushed, and that's why when everyone's stacking on the put position, you need to be incredibly careful about that. We do not want to be going with the herd in this case. Let's look at the 21st. What's going on there? So again, there's nowhere near the open interest amount, but you can see stuck between that 380, 400. Then we move into the 22nd. So that's not going to be a big one. Let's go to the 23rd. And we've got some stuff sitting there. And then we go to the 25th. And you'll notice 801,000. But definitely the calls are starting to play the bigger game here. So 380 to 400, still the biggest area here for the markets over the next week. Will it be just a really boring kind of kangaroo? I doubt it. But it's something to be worried about and thinking about just in the next 24 hours. Will we be able to move down? I don't know if it can get underneath these kind of 385 levels. You would think that maximum pain is possibly what the market wants in the next 24 hours, but certainly somewhere stuck within that vicinity. Let's move over to Bitcoin. Again, we've talked about this a little bit. Basically, this is just the previous declines that have happened on Bitcoin. Then we have the previous kind of decline timings. As we know, we're starting to kind of apply ourselves. The first drop here was about 400 and something. So technically, if we're going to see the bottom for Bitcoin, I've speculated it might be before February of 2023. Could this be it? Well, more information is coming out about the FTT scandal per the day. But in general, when we're seeing just consolidation, the market's still, relatively speaking, stuck between two different zones. And it's just kind of starting to move to the upside. I'm not too convinced by it either way. I think the way that we have to think about this is, do you feel like it's going to have a long-term effect? You know, one conversation I was having with someone that isn't that big into finance, they said, so you heard about that Bitcoin scam, yeah? And I said, what do you mean Bitcoin scam? And that's what they're calling it now. It's a Bitcoin scam. So these are people that used to say Bitcoin loving, and now they're like Bitcoin scam. So it's a change in people's sentiment towards it. Does that have a longer term effect and actually drive the interest in the new accounts opening in Bitcoin down for a little bit, hitting those negative 83, negative 86% scenarios? I guess that's still what I'm working towards in terms of a theory. We'll find out how the price action looks, but at this stage, still stuck within the range. No discernible levels yet. No big news coming out over the next 24 hours. When we scroll through the next week, though, just remember we will be moving into, of course, Thanksgiving. And when that does happen, it does tend to have that bullish tinge to it. So if we start bearishness here, theoretically, Thanksgiving turns into a positive kind of time in the market and something we should be aware of. Make sure to subscribe. Make sure to, of course, smash that like button if you enjoyed today's videos. We'll be covering all of that and more. And do remember, if you're interested in finding out more about Tiger Brokers, now's a great time to do it. For anyone that clicks the links in the description down below and opens an account, funds with more than, I believe, 1 cent, you'll be eligible up until the next couple of days for that free 30-day trial of our Discord community. That is our private community. So if you're interested in that, along with the other bonuses they have, the special offers, then you can go check all of those things out. Thanks, guys.